This is Debt Free in 30. Here's your host, Doug Hoyes.
This is episode number 500 of the Debt Free in 30 podcast, and since 500 is a nice round number, I've decided to do something a bit different today. No guest, just me answering a short question. They say the economy's doing great, so today's question is, why do so many people feel so hopeless? In my day job, when I'm not hosting this podcast, I'm a licensed insolvency trustee at Hoyes Michaelis & Associates, the company I founded with Ted Michaelis 25 years ago, and I spend my working days talking to people who have a lot of debt. I talk to everyone. I have clients who are doctors and lawyers, hairdressers, servers at restaurants, construction workers, and IT professionals. Everyone. So I think I have a pretty good sense of what real people are feeling. Everyone isn't the same, we're all different, but if I had to describe the one word that the average person I talk to is feeling, the word I would use is despair. The complete loss or absence of hope. Now you may think, well, of course, these are people who are coming to see you, Doug Hoyes, the debt guy. Obviously, they're at the end of their line, they have no hope, they have a lot of debt. What do you expect? Let me ask you this question. When you go to the dentist, do you have a feeling of despair? You may be nervous because, whatever the dentist needs to do may hurt, but you don't have a feeling of despair. If anything, you have a feeling of hope because the dentist will fix your tooth and it won't hurt anymore. And for most of the last 25 years, it's been the same in my business. People are nervous when they come to see me, but they've done their research and they know I have a solution for them, so they're hopeful that I can solve their debt problem. And usually I can. But over the last few years, my clients' perceptions have changed. Some of them have lost hope. I say, don't worry, we'll file a consumer proposal and get your debts under control and you can get back on track. They say, I understand you can help me get control of my debt, but then what? Even with no debt, it's not like I'll ever be able to save any money or buy a house. I don't even know if I'll ever be able to get an apartment on my own without having to have a bunch of roommates. Well, they have a point. Most of my clients have a job. Many of them have more than one job or a main job and a side hustle. You know the drill. You get up early in the morning and you pack your lunch because you can't afford to go to a fast food joint every day for lunch, and you put it in your lunch bag or your cooler and you head out the door. And before work, you stop at the place every Canadian goes to every morning to get that one drug that gets us all through the day. Caffeine. So you drive up to the drive-thru and you realize that payday isn't until tomorrow and you've got nothing in your bank account. Your debit card is empty. You won't be tapping today. No problem, you've been here before. You do what we all do. You reach into your ashtray and start searching for loonies, quarters, nickels, whatever you can find. And it's your lucky day, you find a loonie and 2 quarters and you think, great. And you pull up to the window to get your large coffee and the person opens that slidey window thing and says, that's $2, please. And that's when you get hit with a feeling of despair. A simple coffee that used to cost $1.50 now costs $2. It's not a loonie and 2 quarters, it's a toonie. Are you upset because you can't afford a coffee? Sure, but it's more than that. You realize that something has happened over the last few years and you're getting behind, but others are getting ahead. According to Statistics Canada, most wealth is held by relatively few households in Canada. The wealthiest households, the top 20%, accounted for more than 2/3, 68% of net worth at the end of 2022, while the least wealthy households held only 2.6% of wealth. That's 40% of households. There isn't one Canada where everyone has an equal shot at getting ahead. There are two. There are the wealthiest households and everyone else. Let me ask you a question. How did it go for you over the last 4 years? Are you better off or worse? I can predict your answer. For some people, the last 4 years were great. For others, well, it was devastating, leading to a feeling of despair. Whether the last 4 years were financially great or a disaster depends on whether or not you had wealth when the whole sorry mess started in March 2020. If you said the last 4 years were great, my wealth went up, then I know your circumstances. You own a house or a condo or some real estate that you bought many years ago. In January 2019, just 5 years ago, the average single-family home in the Greater Toronto Area sold for $884,000. By July of 2020, it hit $1 million for the first time ever, and 2 years ago, in February and March of 2022, the average GTA single-family home was selling at just under $1.6 million. In 2 years, house prices went up 60%. Now, I know real estate prices have eased off since then, and by January 2024, a single-family home in Toronto had fallen to just under $1.3 million, but that's still 44% higher than it was 5 years earlier. We know what happened. Governments and central banks around the world wanted to keep the party going, so they dropped interest rates, and on March 26, 2020, the Bank of Canada target overnight lending rate fell to 0.25% and stayed there for over 2 years. If you had good credit or assets you could use as collateral, you could borrow money virtually for free. Free money! Fantastic! It wasn't until March 2022 that they started to increase interest rates, which of course corresponded with the top in the real estate market. But here's my point. If you owned a house before 2020, you were able to take advantage of low interest rates and you were able to use the bank's money to buy a house and watch your wealth increase. It's called leverage. Let's say in January 2019, you had cash and saved up a 20% down payment and bought the average $884,000 house. That's $177,000 down payment and a $707,000 mortgage. Let's say you decided to sell at the absolute peak of the market, February 22, for $1.6 million. You had to pay real estate commissions of 5% and you had to pay off your mortgage of $700,000, but you were left with over $800,000 in profit. You invested $177,000 in your down payment and you turned that into $800,000 in 3 years. You increased your money by 4.5 times. That is a fantastic return. Now, obviously, I'm cherry picking the perfect example of someone who sold at the exact top, so it's not realistic. I don't know anyone who made 4.5 times their money, but there were people who doubled their money. Sure. But it's not just house prices that went crazy. Stocks went crazy. The Toronto Stock Exchange Composite Index peaked on February 19th, 2020, and then in 1 month it crashed by 38%. That turned out to be a great buying opportunity, and if you had cash and bought the dip, you made a lot of money because in less than 1 year, from the end of March 2020 to the beginning of April 2021, the stock market almost doubled. And it wasn't just real estate and stocks. Between March 2020 and April 2021, Bitcoin was up over 1,500%. What's the common theme here? If you had money, you did great. If you owned a house or had the cash and good credit to be able to buy a house or a condo, you made a lot of money. If you had cash or had good credit and could borrow money to buy stocks or crypto, you did great. But if you didn't have cash, you couldn't take advantage of this great opportunity. So when I ask you, how did it go over the last 4 years? I know what your answer will be. If you had wealth 4 years ago, like a house or stocks or cash, financially, it was great. And if you had no cash, if you were a renter, it was not great. Wherever you live, rents are up. If you had cash and wealth, it's all good. The rich got richer, the not so rich, well, not so good. That's not just my opinion. The government agrees. On March 13th, 2024, Stats Canada released their quarterly national balance sheet and financial flow accounts. I'm wondering if a government bureaucrat came up with that title. A better title would have been, How Screwed Are We? Statistics Canada said, and I quote, households were wealthier in the fourth quarter as their net worth, the value of all assets minus liabilities, increased $289 billion. That's an increase in wealth of 1.8%. That's fantastic. Let me ask you a question. Did you feel almost 2% wealthier in the last 3 months of 2023? Stats Canada said this increase was driven by strength in financial markets as both bonds and equities rallied. Did your bonds and equities go up? If you had wealth, you got wealthier. If not, sorry, but your rent went up. So, what's the impact of this feeling of despair and the widening wealth gap? How did the events of the last 4 years make us change our behavior? I want you to pretend for a moment that you're 25 years old, or 30, or 35, or 40. For some of you, that'll be easy to do. You did what you were supposed to do. Your parents told you you needed to get an education, so you went to college or university. Your parents didn't have much money, so you had to get a student loan to go to school. So here we are, a few years after graduation, and you have an okay job, maybe not exactly in your field, but you're making money, but not enough to have paid off your student loan. You may still be living with your parents, or maybe you've got an apartment with a roommate or two. Maybe you're working a second job, evenings and weekends, in a restaurant or a retail store as a security guard, or doing Uber Eats or DoorDash deliveries so you can make a few extra bucks to chip away at your debt. And then the lockdowns happened, and you lost your second job, and maybe also your primary job. No problem, it's temporary. 2 weeks to flatten the curve, so you apply for CERB and hope to get through it. and you survive, but then 3 years later, the government says you didn't qualify for the pandemic benefits, so you got to pay them back, and your second job never did come back, and your income has gone up a little bit, but not as much as your rent and food have gone up, and now you're feeling even more depressed. So what do? You got 3 choices. Choice number 1, keep on trucking. Keep going and hope something changes. Maybe you'll find a better job or marry someone rich, or 20 years from now you'll inherit some money. Stay the course. Choice number 2, well, you give up. You realize that you'll never pay off your debt. You'll never own a house, so what's the point working evenings and weekends? I'll find a cheap place to live and earn enough to survive. I won't worry about trying to save money, and if I've got any cash at the end of the week, well, I'll go out and have a beer or something stronger and try to make the best of it. And then there's choice number 3. Go for it. I've got no hope of being financially stable. Why not take one final shot at the big time? I've got nothing to lose. This strategy is called Fatalistic Yolo. YOLO is you only live once. YOLO is a good philosophy to live by. Our time on this little planet hurtling through the dark void of space is short, so why not have some fun while you're here? Don't work every weekend. Go out with your friends. Take a vacation. Have some fun. YOLO can be a very positive approach to life, but fatalistic YOLO is not so good. Fatalistic is a belief that the future is inevitable and it doesn't matter what you do, your choices and actions make no difference, we all end up taking the same permanent dirt nap. So if you believe that you only live once and then it's all over, what do? Many people have said, if I'm going down, I'm going to go out with a bang. Let's roll the dice because I've got nothing to lose. So what does fatalistic YOLO mean financially? It means instead of putting my $1,000 of savings into a bank account earning low interest, I'm going to gamble. If I don't have a realistic shot at a better future earning a small amount of interest in a bank account, why not take a shot at a big payoff? Young people don't buy lottery tickets or go to casinos, but a lot of them have tried online gaming. And they all have an app on their phone to buy stocks or crypto because that's the only chance they've got to make 10 times their money in a short period of time. If I'm going to lose anyways, why not give it one last shot? To be clear, there's nothing wrong with buying stocks or crypto. If you do your research and understand what you're getting into, it's investing, not gambling. I agree that buying Bitcoin is investing if you understand what you're doing. And that's why everybody I know between the ages of 20 and 40 has an app on their phone to buy crypto. I get it. It's one area where the millennials have a financial advantage over the boomers. Technology is a great equalizer. But buying some tiny crypto that only launched 3 weeks ago and doing it with leverage seems to me to be gambling, not investing. But I get it. What else can you do? So what's the solution to this problem? I got a better question. What exactly is the problem? Is the problem house prices rising so fast that they're unaffordable for the average person, or is that a symptom of the real problem? Let me propose an answer to that question. Inflation. The problem is inflation. Since 1998, over the last 26 years, the average inflation rate in Canada has been 2.2% per year. But in the first 6 months of 2021, it averaged 2.4%, and then the next 6 months it averaged 4.4%. And in 2022, the average inflation rate in Canada, as measured by the Consumer Price Index, averaged 6.8%. But that's the average of all goods and services in the economy. Let's focus on what's important to you. In the 4-year period between January 2020 and 2024, the cost of food, as measured by the CPI, these are official government numbers, not my numbers, the cost of food has gone up 22.5%. The food inflation rate peaked at 10.4% in January 2023. You want to know why people are feeling hopeless? There you go. When the cost of food goes up that fast, it's completely understandable that you would have a feeling of despair. Now, I know the government will tell you things have gotten better because in January 2024, the food inflation rate was only 3.9%. But that doesn't mean that food prices went down. It just means they aren't going up as fast. Everyone eats food, and when the cost goes up, it's a financial killer. If you're rich, it's not a big deal because you don't spend a significant percentage of your income on food. But if you live on a low income, after paying rent, food is probably your biggest expense. And when it goes up 22.5% over 4 years, you got a problem. And in case you're wondering, the minimum wage in Ontario during that period went up 16%, which is okay, but it's not enough to cover the 22.5% increase in the cost of food in that same period. You're losing ground and that's why you lose hope. Okay, so you get it. Inflation makes your grocery bill higher, but what does this mean for you long term? Let's take an inflation rate of 4%. That's more than the 26-year average, but a lot less than we experienced in 2022. If you had $1,000 and put it in a jar on your kitchen counter at the end of the year, if the inflation rate was 4%, the purchasing power of your $1,000 would have fallen by 4%. That's what inflation is. It's not prices going up. It's the value of your dollar going down. So at the end of the year, your $1,000 can only buy $960 worth of stuff from a year ago. And if every year your dollar loses 4% of its value, at the end of 17 years, your $1,000 can only buy $500 worth of stuff. 4% inflation doesn't sound like much, but after 17 years, you've lost half your money. Kind of hard to save for retirement when your money will be worth half as much as when you retire. Of course, you didn't lose your loonies. You still have them, but they buy a lot less. If you had 1,000 loonies in a jar on your kitchen counter and I came to your house and took half of them, what would you call that? You'd call that theft. That's what inflation is. Inflation is theft. Theft is when someone takes your stuff. It's yours, you worked hard for it, but they take it and now they have it and you don't. That's theft. Inflation is theft. So who took your money? Now we're getting to the good stuff. Let's think about it. How does your money lose value? Something goes down in value if there's too much of it. If the government prints a lot of money, like they did in 2020 and 2021, the value of that money goes down. That's inflation. The government causes inflation, so they must be doing it to benefit somebody. Who does the government want to help? The poor people or the wealthy? I don't know the answer to that question because I'm not a mind reader. It may be that the prime minister and premier and the mayor all genuinely believe that everything they are doing will help the average person get ahead. I don't know. I can't read their minds. But I can look at the results and we know what happened. We know that in 2019, we had moderate money supply growth, but starting in 2020, money supply growth went way up, hitting annual growth rates of over 25% before slowing down to still very high growth rates of over 15% in 2021. Who cares, you say? I'm not an economist. Tell me something I care about. Okay, do you care about inflation? Do you care about the cost of food and rent going up? More money in circulation leads to higher inflation. The economy shut down in 2020 and the government said you had to stay home so you couldn't go to work. If people can't work, they still need money to buy food, so the government created the money. That's why the money supply went up. They created it. But here's the catch. If the amount of dollars in the economy goes up, but the amount of goods stays the same, prices go up. It's the law of supply and demand. That's inflation. But I know what you're thinking. You're saying, wait a minute. The government gave out a lot of money in 2020 to individuals in the form of CERB, and they also gave a lot of money to businesses for wage subsidies and rent subsidies and CEBA loans. So that greatly increased the money supply. But from March through December 2020, the average inflation rate was less than half of 1%. So obviously money printing doesn't cause inflation. No, that's wrong because there's a time lag. If I eat a bag of cookies, do I gain weight and get sick immediately? No, I feel great. But if I eat a bag of cookies every day for a year or two, I'll gain weight and get sick. It takes time. And that's exactly what happened with inflation. It was low in 2020 because the economy was shut down and we weren't spending as much. Inflation started low, but in 2022 it averaged 6.8%. It took time, but it happened. The time lag's about 16 months from when the money supply starts increasing to when we see an increase in inflation. You can see it on the chart. Blue line is the money supply, but I've moved it to the right by 16 months to account for the time lag. The orange line is the growth in the consumer price index, and as you can see, when the money supply increases, 16 months later, inflation goes up. Of course, when the government stopped the pandemic benefits, the money supply started to drop, and as a result, in the last year, we've seen inflation drop. I've predicted that inflation will keep dropping, temporarily, due to the drop in the money supply. We'll know by the summer if I'm right. So to summarize my theory, we have an economic system based on debt, and a lot of that debt is created by governments around the world printing money. And yes, I know I'm oversimplifying how the economy works. I realize that the government creates money electronically, not on a printing press. Printing money is a figure of speech. And I realize that in a fractional reserve banking system, the banks also lend money into existence, but this is a half-hour podcast, not a university-level economics course, so I'm trying to keep it simple to illustrate the basic point, which is that printing money leads to inflation, which disproportionately screws people at the lower end of the economic spectrum. With inflation, the rich get richer and the poor get poorer. With inflation, assets go up in value, so if you own assets, great, and if you're a renter and have no assets and have debt, you lose. So what's the solution? Well, if I was emperor, I'd follow the advice I give every one of my clients, which is spend less than you earn and use that surplus to pay down debt and build up an emergency fund for the future and stop printing so much money. I'm recording this in March 2024, and the federal budget isn't released until April 16th, so I'm using old numbers. But based on the government's fall economic statement, I'll put a link in the description, for the 2024 fiscal year, the government was projecting public debt charges of $46.5 billion. To put that in perspective, the Canada Health Transfer is $49.4 billion. And I'm oversimplifying here, but if we didn't have any debt, and therefore if we didn't have to pay any interest on the debt, we could more than double the Canada Health Transfer without raising taxes or increasing the federal debt. Given the state of our healthcare system with long wait times in emergency rooms and to see a doctor, would we be better off if we could double our healthcare spending? Yeah, we would. And again, I'm oversimplifying how this works, but my point is that if we weren't paying interest on old debt, we'd have more money to spend on important stuff like healthcare. So if it was up to me, I'd find a way to reduce expenses so we could pay down the debt. But of course, I live in a dream world, and that will never happen in real life. No politician will get elected by saying, hey, here's the plan. I'm going to spend less on you. I'm going to spend less on healthcare and roads and all the stuff you want. No one would vote for that. So, in my opinion, there is no chance that any politician will ever fix the problem. Sorry to be the bearer of bad news, but all politicians are the same. It doesn't matter if you vote for the guy with the red tie or blue or orange or green. Ultimately, it all turns out the same. A politician wants to get reelected or elected. They know they can create money out of thin air and give it to us, and it'll take 16 months for the inflation that they caused to show up, and by that time we'll have forgotten that they caused the inflation, so we won't blame them. We're happy when we get the money, and we don't blame them for the problem. And when inflation does happen, the politicians say, well, it's caused by corporate greed. Yeah, no kidding. All corporations are greedy. They want to make money. Tell me something I didn't already know. Is this a new thing? Did corporations only start getting greedy 3 years ago? No, they've been greedy for a long time. What's changed is the expansion of the money supply. The corporations just use that as an excuse to make more money. Funny how that works, eh? The politicians blame the greedy corporations blame government policy, and the politicians keep getting reelected and the corporations keep making money, and we're left with paying $2 for a coffee that used to cost $1. The only way to fix the system is to fix the money. We need a system where politicians can't print unlimited amounts of money to buy our votes. But politicians will never change the system because they'd never get elected. And I know some of you are saying, well, we need to go back on the gold standard. If every dollar was backed by gold, the government would need to get more gold before they could print more dollars, and that would keep a lid on how much money they could print. Yeah, that's true, but we've tried it and it works for a while, and then it doesn't because we don't use gold coins every day, so as long as we're using paper money, politicians can print it. Maybe we should switch from using dollars to using Bitcoin. That's a good idea. The government can't print Bitcoin, and it's a worldwide currency, so no one country controls it, so that might work. But again, what government is going to agree to that? Yeah, I know they're doing it in El Salvador, but the leader there is basically a dictator, so he can get away with it. I don't think it would be that easy in Canada or the United States. So my point is, I know what the problem is. I've explained it, but I don't know how to fix it at the government level. If you've got an idea, leave it in the comments, and if it's a great idea, well, I'll think about voting for you when you run to be our dear leader. So my answer is, if you can't fix the country, take care of yourself first. If you're flying in an airplane with your kid and the cabin loses pressure and the oxygen masks drop down, what do? Do you start by putting the mask on your kid? No. You put your mask on first, because if you pass out, you can't help your kid. Take care of yourself first, and then you can help everyone else. You know what's coming. The cabin will depressurize. Inflation is going down at the moment, and likely will for a few more months, but inevitably the politicians will want to get elected, so they'll go back to printing money. The rich will get richer, so you want to be one of the rich. Now, I know you can't just wave your hands and become wealthy, but here's my strategy. First, and most importantly, reduce your debt. I understand having a mortgage to buy a house or a car loan because you need a car to get to work. Fine. But credit card debt, payday loans, the interest rates are too high. You can't afford to lose some of your paycheck each payday to interest payments, so you have to get out of high interest debt. If you can do it on your own in a reasonable period of time, great. Get a second job, start a side hustle, reduce your expenses, get a roommate, bring lunch to work, buy a thermos and make your own coffee. $2 a day for coffee is over $700 a year. You decide if buying a coffee at the coffee shop is worth a month or two worth of groceries. And if your debt is way too much to pay off on your own over the next few years, give my office a call, talk to a licensed insolvency trustee, maybe a consumer proposal or a bankruptcy is the necessary first step. But getting out of debt is only the first step. The next step is to save $20. That's your goal. No debt and $20. I did a podcast number 270, The Fable of the $20 Bill. Link in the description. It's only 17 minutes long. I suggest you listen to it, but here's the gist of it. The first step to great riches is to get $20. If you're living paycheck to paycheck, and most people are, you go to the grocery store and you buy what you need for the week and nothing more. You can't buy in bulk or take advantage of any sales because you need every loonie you have to make it through the week. But if you have an extra $20, everything changes. You see that your favorite brand of toilet paper, the soft kind, is on sale for half price. So instead of paying $10 for the small pack, you can pay $10 for the big one. You can stock up. And chicken is on for $5 a pack. You can buy 2 extra packs and stick in the freezer. You invest that extra $20 in toilet paper and chicken, and next week, when you go to the store, you don't have to buy toilet paper and chicken. You've got extra money, so you can take advantage of the sale on ground beef and eggs. And then the following week, you don't need to buy toilet paper or chicken or ground beef or eggs because you stocked up, so you've got some extra money to put in your savings account. You've now got an emergency fund, so when you have an unexpected expense, which you will, it won't crush you. It takes time and hard work and sacrifice, but eventually you build up savings of $100 or $1,000. That's great, but what do you do with it? Put your loonies and toonies in a jar on your kitchen counter? It's not a great idea because you know that because of inflation, your dollars lose value every month. You have to put your money in something that will hold its value. That's why people buy real estate or stocks or Bitcoin. I don't know what the right answer is for you. You've got to figure that out for yourself. But here's my point. The deck is stacked against you. If you don't have wealth, you are falling behind. That's why you have a feeling of despair and hopelessness. But now that you've got a glimpse of how the world works, you can take steps to leave the system and chart your own course. It isn't hopeless. It's not easy, but it is possible to escape the system that's stealing your money every month and make it work for you. You can do it. That's our show for today, episode number 500 of Debt Free in 30. If what I had to say today made you think, whether you agree with it or not, please like and share this episode with someone you know who needs to hear it. Regular programming with a guest returns next week, so please subscribe on Spotify, Apple Podcasts, YouTube, or wherever you get your podcasts, and hit the like button and leave a comment so that the algorithm knows you're watching. And I'll continue to share practical advice on how you can live debt-free and beat the system. Thanks for watching. Until next week, I'm Doug Hoyes. That was the 500th episode of Debt Free in 30.
Hi Doug. Many years ago, before Debt Free in 30, you were in my Cambridge office and you were telling me about how you never listen to the radio in your car anymore, that you just listen to various podcasts. I said, hey, there's an idea. You like to talk a lot. Why don't you do your own podcast? You said the problem with that is if I start, I probably won't stop talking. Well, a few weeks later, you brought your first recording desk, used me as a guinea pig to do some test recordings, and here you are 500 episodes later, still talking. Congrats, Doug. It's a great show with lots of great guests, fantastic advice covering a whole spectrum of financial topics. Keep it going. You probably don't need me to tell you that. I have a feeling you're not going to stop talking anyway.
Hi, Doug. Congratulations on 500 episodes of Debt Free in 30.
Great job.
You are a fabulous host, and I thank you for that.
Doug, I understand it's your 500th episode of Debt Free in 30. Amazing. I must have done 250 of them. How come I don't get a prize too? Have a good day.
Hi, Doug. Congratulations on hitting your 500th podcast milestone for Debt Free in 30. That's quite an achievement. That's 10 years of podcasts when you're putting out a high quality podcast once a week. Pretty remarkable, well-regarded podcast. So well done. And thanks for putting up with me so many times on there. And hopefully you shoot for another 500 and get to 1,000. Well done.
I don't think that when this all started, anybody really thought it would make it this far, but you've proved us all wrong, and it's been a very valuable tool for a lot of our clients. I had the opportunity last night to go back and listen to the first podcast in preparation for this congratulatory address. It's quite interesting that you've stuck to your guns. You still bring in the interesting stories, clients that are very informative. People keep coming back to listen to the podcast because of that. And great job, good work. Congratulations to you and to your co-partner, Ted. One of the things that I think really has changed from the first podcast is I don't think Ted still has a mortgage. Anyhow, congratulations, best of luck to you guys, and see you at number 1,000.
Hey Doug, it's Kelly Keane here. Just wanted to send you a hearty congratulations for reaching the 500 episode milestone of Debt Free in 30. You're doing such incredible work educating Canadians and taking away the shame and embarrassment of debt. So congratulations, my friend. You are a force to reckon with. Keep up the great work.
Hi Doug, congratulations on 500 episodes. Thank you for letting me be part of the experience.
Hey Doug, congratulations on 500 episodes of Debt Free in 30. Keep them rolling.
Hi Doug, congratulations on your 500th episode of the podcast. I don't want to sound overly dramatic, but the podcast literally changed my life. I started watching the podcast 5 or 6 years ago when I was living on the West Coast, and after watching the podcast for a while, I realized I wanted to work for a company that was as progressive, technologically advanced, and helpful as Hoyes Michaelis was. After that, I applied for a job at Hoyes and ultimately packed up the family and moved out to Toronto. I still love watching the podcast as well as living out here. Congratulations again, Doug.
Congratulations, Doug, on the 500th podcast. I watch you on YouTube of Debt Free in 30. So big job. I've been watching you for a long time and it's been great. And you're sort of my inspiration, truth be told, for having a podcast. So well done. Congrats on the 500th. Good on you.
Hey Doug, congratulations on your 500th episode of Debt Free in 30. These are really helpful to anyone who has debt, so keep up the good work.
You are now considered what my young people would say, an influencer. So keep it up and hope to be part of the next 500 episodes. And yeah, congrats again.
Hi, Doug. Congratulations on your 500th podcast. No podcaster has your creativity and passion, and it's no surprise you've reached 500. Here's to the next 500.
Hey, Doug. Ben Rabideau here. As you know, I'm a big fan of the podcast and all the work that you do personally to kind of keep Canadians educated on personal finances. Keep up the great work, man.
Hi, Doug. Congratulations on the 500th episode of Debt Free in 30. Thank you. I know it's a lot of hard work, and you know I appreciate it because it does help out us. My favorite episodes are the year-end episodes when you and Ted do your predictions, and my favorite guest has been I like Ron the Mortgage Guy and the Food Professor. Those are my favorite episodes. But again, thank you, and congratulations.
Hi, Doug. Congratulations on 500 episodes of Debt Free in 30. Quite the achievement. You deserve all the congratulations and look forward to 500 more. Cheers.
Hey, Doug. Congratulations on 500 episodes of the podcast. It's been a huge help to a lot of people. I've really been glad to have been on it myself a couple of times, and here's to at least 500 more.
Hey Doug, congratulations on 500 episodes of Debt Free in 30. You've managed to educate thousands of listeners, and we can't wait to see what you have in store for the next 500 episodes. Keep up the fantastic work, and here's to many more milestones in the future.
Hi Doug, 500 episodes of Debt Free in 30? That's amazing, what an accomplishment. And I'm not in the least bit surprised. If there's one great thing that came out of Till Death Do Us Part was when I got to meet with you. That show introduced us. It was wonderful. And we have been very good friends since then. I really appreciate the time and effort you put into helping me with projects that I had. And if there's anything I can ever do for you, other than say, hooray, you know where to turn. Big hugs and kisses. Tell Sharon I send her one too.